the Stanlib Industrials Fund currently has Aspen Pharmaceuticals and Cipla MedPro as its biggest pharmaceutical holdings, with a 5% and 3% holding in the portfolio respectively. Both are becoming more international in nature, Aspen through selective acquisitions and Cipla through the proposed takeover by its parent company. Theo Botha from Stanlib is in studio to tell us why he likes these companies so much. Theo, Aspen Pharmaceuticals, the golden of golden childs, I think, in the local market. What are they doing so right? I think in the first half of the show you alluded to looking for skills in the companies that you buy in terms of the acquisitions and the expansion that they're doing. What's convinced you that Aspen is such a great company to hold at this point?
Well, first of all, generic kind of drug utilization is a growing theme globally because they're cheaper and access to medicines in a country like South Africa is actually growing. The government is spending a lot of money in their health budgets to grow the access to healthcare, for example, through ARVs for people that are HIV positive. And Aspen is sort of linked into that. So thinking back to what we said earlier, we're seeing volume growth in their business. And volume times price gives you very good kind of turnover growth. And then they have this fantastic facility to manufacture the drugs, and by getting more volume through the facility, they get operating leverage too, which obviously falls through to the bottom line. That's the kind of the South African strategy, and then they're also kind of rolling that out globally. They're growing in countries like Australia. They are expanding in Latin America. They buy sort of the tail-end products from GSK, which is a global multinational drug company, which also has a share in Aspen. And they've proved that they've executed very well on this internationalization strategy of them. But the bottom line reality is they're managing to grow their profits faster than their top line, and that's one of the reasons why we like Aspen a lot.
So just to get this right, in terms of their business model, they both develop drugs, manufacture drugs, and distribute the drugs, South African, locally, and now increasingly offshore.
Yes.
And just to color that for our audience, in terms of where their revenues and profits are coming from at the moment, we've got the Aspen Pharmaceutical share price here. If we went back further, it would almost look like a vertical line up, I think.
Yes.
But how much of their business now is coming from overseas? And how much do you expect in the next few years?
It's probably 1/3 South Africa, 1/3 Australia, and 1/3 from other geographies in the world. And South Africa, the South African share is going to shrink, and the international component is going to grow. And they're going to grow in two geographies. They're going to grow in the Latin American geography, and they're also going to grow in the Asia Pacific geography. And if you think about it, there are a lot of people in those two kind of continents. And Aspen has minute shares of drugs there. And what they're going to be doing is doing the same kind of model here, is they're going to be rolling out their generic drugs in those markets. And I think that is why globally investors are very excited about the opportunity to be invested in Aspen.
The types of acquisitions they do, we've talked about that expansion strategy. Are they large acquisitions generally, or what type of businesses are they buying when they go into these markets?
They've kind of done very chunky and bold kind of deals in the past. So they've been known for kind of landscape changing deals. The last big deal was buying a pharmaceutical business in Australia, Sigma. They had a presence there, but by buying Sigma, they made that business three times larger than what they had. Their entry into Latin America has been slightly more kind of cautious and guarded, and it hasn't been such a big deal. But I think eventually, when they understand the market in South America, they'll do potentially a bigger landscape deal. They are trading under cautionary at the moment, looking to buy a business in the Netherlands, which is going to be quite a chunky deal when we get to know what the parameters of that deal is.
Theo, is this the next SAB Miller of the pharmaceutical industry? I mean, is this going to be a company that might rival at some stage in the next 10 or 15 years the size of a GSK or some of the other Pfizers of the world?
They certainly have global ambitions. They're growing at a rapid rate. We like them because they're growing at that rate. Where it will end is difficult to say, but I think they are growing faster than many other companies that we're looking at.
The other pharmaceutical company, obviously, that's quite prominent in your portfolio holdings at the moment is Cipla MedPro.
Yes.
It's kind of like the South African arm of an Indian company. It's now received an offer to take out offer by the parent company, and off air you mentioned that you guys would be following that, so you would be agreeing to that purchase. Is this now just a case of that's it for Cipla as far as it goes? Will it still remain a listed entity?
The offer that Cipla India has made for Cipla MedPro is for 100% of the shares. So in the event that the deal is approved by shareholders, yes, then South African investors will lose the opportunity to be invested in Cipla.
So a little bit down there, but I know you were an early acquirer of Cipla shares. We've got the share price here. You said that you were acquiring shares at about the R2 mark, and obviously the transaction, as I understand, it's being done at R10, which means the market's not quite sure if it's going to go through, if it's trading at R9.15 at the moment.
I think there are two things there. Maybe some of the shareholders, all of them are not convinced that they want to take the R10. Other issues are that they put out a trading statement, I think it was late last week, or saying that their earnings will be down substantially. On restructuring charges, all kinds of things that have been happening in the company. So that's probably putting a little bit of uncertainty into the share price. We still think that the R10 is a good offer. If you buy the shares at this today, you're going to make in excess of 6% in quite a short period of time, I think. So very happy to hold it at R9.15 and waiting for the R10 offer.
Right. You indicated as well in our discussion off air that the portfolio now has about a 15% exposure to pharmaceutical companies.
Yes.
And you also said that you're going to be taking the proceeds of the sale of your Cipla shares and putting them into hospital groups. Just tell us what the rationale is for that.
Well, Aspen is one of our favorite holdings, but it'd be difficult to argue that the share price is offering exceptional value today. I think there's a lot of things that are priced into the share price that we still need to see, the detail on the deal that's being contemplated in the Netherlands, for example. So when we're taking the proceeds of Cipla, what could we potentially do it? Assuming we still want to be exposed to healthcare, we can put it into hospitals. Netcare is also a business that gives us exposure to South Africa and also in the UK. We think the South African business is cheap. Once again, that story around top line growth and operating leverage, we think they've got that opportunity in South Africa. We think the UK business is not really adding any value to the current share price. Obviously, there are lots of risks to the UK business. The economy is not doing well. The debt has to be refinanced. So there are lots of issues around the UK business. But we think it's not worth naught, which is probably what's been priced into the share price now. And so to take the money off the table in a Cipla, to put it into a Netcare, sounds like quite a good idea to us. So
it's just a kind of like a portfolio decision that you've made to keep the exposure in a fairly defensive type of business. You indicated that Netcare business was having a tough time in the UK. I thought hospital businesses were defensive, so I'm a little bit worried now. What's happening to that business model under the circumstances? Are people not visiting the hospital as much as they should be?
Well, in South Africa, you and I would go to a private hospital. In the UK, people would go to the NHS because it's free. Few people can afford private medical insurance in the UK, and that's the kind of business that Netcare is selling there. So that business is under pressure because the economy is under pressure and private jobs are not growing but shrinking. But the opportunity is that once the UK economy recovers, people will go to private facilities because the care is slightly better. You're getting a 5-star service versus maybe a 3-star service when you go into an NHS hospital. Some people like that. They'd rather be in their own bed with a TV with channels that they can choose rather than lying in a ward with 20 other people and not having a TV.
Right.
And that's the proposition that Netcare sells there. And we think that as the economy recovers, there's scope for that business to grow.